Good morning, good afternoon to all of you joining us from different places. I'm Raymond Kerr. I'm the Chief Program and Development Officer here at AGSIW. Thank you for making the time to join us for this webinar that is part of AGSIW's ongoing focus on the energy transitions taking place in the Gulf region. We're very happy to have with us our good friend Ben Cahill, who will discuss the findings of his soon-to-be published AGSIW paper, Everything at Once, the Transformation of Abu Dhabi's Oil Policy. For those of you who don't know Ben, Ben is currently a senior fellow in the Energy Security and Climate Change program at CSIS. He focuses on geopolitical risk and the oil market, as well as the economics of oil-producing states. He was previously director in Energy Intelligence's Research and Advisory Group and led its country risk practice, advising oil and gas companies on politics, economics, and policy risks. He also wrote on corporate strategy and was the lead analyst for Saudi Aramco, ADNOC, and the Southeast Asian national oil companies. Previously, he also worked for PFC Energy, now part of IHS Markit. Moderating the discussion today is AGSIW non-resident fellow Kate Dourian. Kate is also a contributing editor at the Middle East Economic Survey and a fellow at the Energy Institute. Previously, she was the regional manager for the Middle East and Gulf states at the World Economic Council, or World Energy Council, my apologies, as well as the program officer for the Middle East and North Africa at the International Energy Agency. Before we start, I wanted to remind everyone that this conversation today is on the record. We'll begin the session with a discussion between Kate and Ben, with the second half of the hour dedicated to your questions, which you can submit via the Q&A function on the Zoom dashboard at any time. With that, I'll stop here, and Kate, over to you.
Thank you, Raymond. Ben, I've seen your paper, and I'm going to give just a very, very brief summary of where things started and where they are today, and then maybe talk about what the policy and governance changes mean and what the risks are, the downsides and the upsides. So you've spoken about the development of the UAE's energy policy, or should I say Abu Dhabi, because basically most of the oil is in Abu Dhabi. They are the wealthiest of the 7 Emirates. And it's been an amazing transformation, very, very rapid. If I were to go back to when I was in Dubai back in 2000, if you were to visit ADNOC offices, they were in an old, dilapidated building, pokey offices. It didn't really reflect the company's role in the oil market, which has always been quite significant. So the old generation was very conservative, as you say in your paper. It was more traditional. It was more of a the foreign legacy partners were entrenched. It was Exxon, it was BP, Shell, Total, with Partex as a sort of legacy of the old IPC concession. And, they were producing, selling oil through long-term contracts, controlling all upstream, midstream, and downstream operations. But then Sultan Jaber came, and we saw the incapacitation of Sheikh Khalifa because of a stroke. You had Sheikh Mohammed bin Zayed, MBZ as he's known, consolidate power over the oil policy. The SPC no longer exists. It's been taken over. We've seen a consolidation not only of the power within the hands of MBZ, Sultan Jaber, who has rank of minister, who is CEO of ADNOC, previously at Mubadala, whose CEO, Khaldun Mubarak, is also part of this powerful troika. And we've seen a change in governance, we've seen divestments. So at the same time, the UAE has diversified its energy mix. It now has oil and gas, the Arab world's first nuclear power plant, the largest share of renewables in the GCC region. But they are banking a lot on expanding oil and gas. So their oil production capacity is going to go up from around 4.2, you say, to 5 million barrels a day by 2030, which would put them at parity with Iraq now. And that raises a question of what commitment there is to OPEC if there's going to be production restrictions in the future, because at the end of the day, even though it is more diversified than the other oil producing nations in the region, you still have a lot of reliance on oil and gas generating the revenues in order to drive the diversification, decarbonization, etc. There's, as you say in the paper, there's been a change in the culture. So capacity expansion, maybe tensions within OPEC, and at the same time, they've launched their Murban futures contract. And that implies that, you know, they've liberalized their marketing strategy. There are no longer destination clauses included in the contracts. So to serve as a benchmark, you need to maintain some liquidity. So is that also an issue in how they develop their trading strategy? And of course, the new partners, the foreign partners, reflect a wider geography. It's Europeans, it's the OMVs, it's ENI. You've got the Chinese, you've got the Japanese have always been there in a smaller scale, but you've got more Asian companies. So that makes it even more complicated for them to comply with OPEC restrictions. So what I wanted to ask you was, given that, you know, Sultan Jaber has overseen this immense transformation, ADNOC is more of an operates more as an IOC. They've managed to raise funds without basically losing control over their resources, but they have sold off midstream assets. They have, you know, gas. They've got they're hoping to become self-sufficient and lessen imports from Qatar. And at the same time, we're seeing others in the region, like Saudi Arabia has now followed their example, not fully. I don't think ADNOC is going to go the way of Aramco, as you say in the paper. It's not on the cards that they will privatize or offer any, but is it excluded? So what I wanted to ask you, and maybe after your presentation, is what are the risks and rewards of this shift in policy? So over to you.
Great. Thank you so much, Kate. And thanks to the Arab Gulf States Institute for the opportunity to write the paper and also to be with you today. I thought maybe I would just start by giving some brief opening remarks to give you a sense of what the content of the paper is and some of the major points I've tried to make about the evolution of ADNOC and also oil policy in UAE. And then maybe talk about some of the specifics about what this means for OPEC and the significance of the Murban futures contract. But as you say, Kate, the last 5 years has been really a hyperactive period for ADNOC and for Abu Dhabi after many years where this was a pretty sedate kind of company, and the oil sector didn't change very much, frankly. And what I wanted to do in the paper is give a sense of everything that's happened since 2016 and explain a little bit about the state's motivations and the drivers, especially Mohammed bin Zayed's vision for the sector and everything that Dr. Sultan Al Jaber has been tasked with carrying out. So there's, you know, it almost seems like there's a new deal every week in Abu Dhabi, but I think it's important to kind of start with first principles and think about what the vision is and the goal. So just a bit of context to look backwards a little bit at the old system. You know, in the old system in Abu Dhabi, you basically had 3 mega concessions in the oil and gas sector. You had the onshore ADCO concession, which was about 1.6 million barrels a day back in 2015. You had the ADMA OPCO concession in the offshore, the major offshore concession, and you had the ZADCO concession with the Upper Zakum field. And aside from that, you had a series of smaller concessions, mostly operated by Japanese companies. So these were huge concessions. They had, you know, licenses that existed for multiple decades. And what Abu Dhabi really did was rely on, you know, a small set of partnerships with trusted companies. So this is basically the Abu Dhabi club, so-called, of Western majors, which you already mentioned, Kate, and a small number of Japanese companies like Impex and Cosmo Oil. You know, some of these concessions lasted for 40 years, and there was not a whole lot of change or change in the structure of the concessions, the way they were managed. You know, you had a very complex, sort of unwieldy structure, particularly in the offshore, and it existed for decades. But, you know, I'd argue that the formula was very successful. I mean, it was obviously quite successful for Abu Dhabi. We're talking about an emirate with a tiny population, massive hydrocarbon resources. It was always very focused on conserving those resources, managing them carefully, keeping plenty of resources in the ground for future generations, and very cautious management of the resources that they had. It was a very successful formula for the Western companies too, and for the Japanese partners. You know, the margins were low, but the resources were huge. could book a lot of reserves and have equity access. It's pretty rare in the Gulf. That was formerly very important to investors, not so much these days because the world has changed, but pretty successful formula. But throughout this whole period, ADNOC was a really passive partner. I mean, it was a pretty unadventurous company. It really depended on its partners for technical expertise, the management of those big asset clusters. There were a lot of secondments to ADNOC from the companies. It was a pretty sleepy kind of company. It was kind of the quintessential rentier state NOC. And another thing that's important to underscore here is that ADNOC always had a domestic focus, whereas Abu Dhabi had other state funds like IPIC and Mubadala that made the international investments in energy, in petrochemicals companies, and upstream companies with assets abroad, in downstream firms. So there was a very clear separation between ADNOC, which managed the oil and gas resources at home, and these other funds that invested in other things. And what we've seen really, especially since 2016, when Mohammed bin Zayed kind of consolidated control of the sector, is a totally different approach. And you mentioned some of the points already, Kate, but the focus is on shaking up these old structures, to streamline the concessions, to add a lot new partners, to increase the operational focus on each asset cluster in each field. So in some cases, like the offshore, to break these apart, bring in a new set of partners to concentrate on each particular asset, and really to create more value from every asset in the oil and gas space. I think there's a big focus also on growing production today, not keeping it in the ground. And here I think that the energy transition is really driving this change in thinking. The old system of kind of, conservative resource management, being the last oil producer standing, I think that's being questioned in the Gulf and across the world. I mean, you can't really count on robust oil demand for decades to come. So that's definitely changing ADNOC thinking. We see today much more openness to investment from Asian companies and a desire to reduce the reliance on Western IOCs. I think the Abu Dhabi Club has really much diminished over the last couple of years. And the investors that are ascendant are the Chinese, Korean, Japanese, and Indian companies. Those are the ones who've won the big stakes. Much more focus on keeping control, but also raising capital by privatizing bits and pieces of the entire oil and gas sector. Whether you're talking about the upstream, midstream, gas, the drilling segment, really everything is up for sale as long as ADNOC keeps a majority stake and keeps control. And I think ADNOC has really shown how much capital can be raised by privatizing different elements of the sector without losing that control. By my reckoning, they've raised about $25 billion since 2017 with that first partial IPO of their fuel distribution company. If you compare that with the Aramco IPO, which raised $29 billion, that's a lot of money raised without having to list and embrace all the kind of transparency and disclosures that you have with an IPO. And basically, the whole MO is to move faster and to push for higher performance across the sector. I do want to underscore that energy policy in Abu Dhabi has always been linked to geopolitical goals, and that hasn't gone away. It's just that the geopolitical context has changed. So building those linkages with the key growth area of the world, which is Asia, building those linkages with the major oil consumers and locking up demand for your crude is a big part of ADNOC's thinking, and it's why the Asian companies have grown so much. Maybe I'll just briefly touch on some of the successes and the remaining challenges here. I mean, I think it is remarkable how much ADNOC has changed in 5 years. I mean, Kate, you mentioned the old building. I remember visiting that old building, seeing it. The fact that they moved into this kind of sleek new tower, I think is very symbolic of the change. It's palpable when you go to visit ADNOC these days that there is a churn. The pace is kind of frenetic. The big guy on top, Sultan Al Jaber, is in a hurry. He's constantly handing down requests and initiatives. Consultants get new requests for proposals constantly. In some cases, it seems like the company is kind of running this way and that, pursuing one ambition, then abandoning it before it comes to fruition. So there is a certain amount of burn rate that's happening, and it does create a lot of stress on the staff. But it is a massive cultural change that's happened at this national oil company in 5 years, and I think we have to recognize that that's a pretty big achievement. You have a lot more diverse partnerships that I think are in line with the energy realities of today, rather than the realities of the 90s or the 2000s. And again, they've raised a lot of capital They've shown how much value can be unlocked from all segments of the industry, including some overlooked segments like oil and gas pipelines, for example, and real estate. And really, if you look at the next decade, I think Abu Dhabi is pretty well positioned for growth. It's one of the few countries in OPEC that has the capacity to raise production. So if the demand picture improves, Abu Dhabi is pretty well poised to meet that future demand. And it's also developing a lot of resources that were overlooked for years, like unconventional gas, sour gas. They're kind of turning over every stone to try to raise production. And frankly, I think they're feeling very confident about the decade to come. And some of the challenges, maybe we can talk about this a little bit more in the Q&A. I mean, clearly you have a growth agenda that is at odds with the UAE's OPEC quota. And this is already a source of tensions. It bubbled over last December in the OPEC meeting. At the time, production capacity was about 4 million barrels a day, but their quota was only 2.59 million barrels per day. So there's obviously a huge gap there. And the longer this goes on, the more the tensions will grow. They're looking at raising production capacity to 5 million barrels a day by 2030. So a more realistic OPEC quota is going to be necessary, I think. And that will create tensions and problems within OPEC. Anytime you allow one member to increase its growth, other members want to reassess their targets as well, Iraq and other countries. So it's a challenge. If we look at the Murban Futures contract, that adds to that potential friction because it really places a priority on having more liquid volumes available for export. You have to have that liquidity available to kind of guarantee confidence in that benchmark and that the deliveries will be done as planned. I do think that there are a lot of questions about the pace of development for unconventional oil, complex gas projects. These are not things that ADNOC has done over time. There are a lot of uncertainties about how much it's going to cost, how quickly those things can be developed, whether or not the pieces are in place. So that's going to be a really heavy lift over the next 9 years. There is a big target to become gas self-sufficient by 2030. I think the jury's still out on that. And then lastly, I mentioned this before, but I do think that ADNOC is stretched pretty thin. There are capacity challenges at the company. They're trying to do everything at once. Massive downstream expansion, huge upstream expansions in every area. A big change in crude marketing. All these things are happening at the same time. And they have built capacity. They've hired externally a lot of good people. They've created the message that there are going to be key performance indicators and staff is going to be required to meet those. So they're putting, more of a performance pressure indicators behind everything. But it's a big lift over the next decade, and it's going to require this kind of continued cultural change of the company. So those are some of the challenges. I think maybe I'll just leave it at that. I'm happy to take questions from you, Kate, and from the audience.
You spoke about the fact that they're going ahead with this expansion at a time when demand forecasts are pretty difficult. I mean, everybody expects that there will be peak demand at some point. It may come by the time they've increased their capacity to 5 million, that demand will start plateauing and not growing at the rates that we saw in the past decade. And at the same time, you have decline rates. You've got rather complex fields that have been producing for a long time. So I wonder how much of that is going to be net capacity, and whether that investment is really just to retain a position in the oil producers world. And as you said, if they start asking for additional for incremental, for a higher quota, then it does open a can of worms, because you've had this traditional rivalry between Iran and Iraq on parity. Once they reach a certain level, and of course now Iraq has overtaken Iran. So I think, as you said, that is going to increase tensions. But is it really that investment necessary to produce net new capacity, or to just stem these declines and ensure that they do have a continued role in supplying the market?
Yeah, I mean, every oil field has a decline rate, of course, but these are some of the biggest reservoirs in the world, and I think the decline rate's substantially lower in Abu Dhabi than a lot of other places. I don't know an exact breakdown in terms of the capex that's devoted to extending production life of existing fields versus growth, but my sense is that the vast majority of this is about growth. If you add up all the capacity expansions that are underway now at some of the offshore fields, the Admiral Opco concession, former Admiral Opco concession, Lower Zakum, Mshaif and Nasser, and the others. The Upper Zakum field is on the way to producing 1 million barrels a day. You have potential liquids production in the Gasha sour gas concession of about 120,000 barrels a day, and you have onshore expansion. You add all those up between now and 2030, it might not take you to 5 million barrels a day, but it's going to get you pretty close. And you know what I've gathered from Abu Dhabi's ADNOC statements is that they think they can hit that 5 million barrels per day target without a whole lot of new exploration and production. In other words, without a lot of new fields coming online. I'm not sure that's entirely true, but I do think that just with the production expansions that are underway, you're going to get pretty close. And I think just one last point, in the global context, this is really significant because we're at a time when obviously we've seen huge cutbacks in capex budgets for companies around the world over the last 5 years with the oil price decline. Last year, ADNOC approved a $122 billion budget over the next 5 years. That's really quite different than the global picture from spending. And I think that they kind of see themselves as a company that's poised to benefit from seeking to grow while everyone else is retrenching and shrinking.
We have a question, but before that, I want to get back into sort of there is demand uncertainty, global demand uncertainty, but at the same time, there's also a sort of investors have lost their appetite, consumers are losing their appetite for carbon products, and there is a decarbonization drive. And if I mention Aramco in anywhere, or ADNOC isn't as well known as Aramco because it's for some reason it's a bigger name, but there is a sort of people shrink back and say, oh, oil, dirty oil, and there is a reputational issue that I think. Yes, I know that they are going into they're talking about green hydrogen, they're talking about circular carbon economy. They do have the steel plant where they are capturing, I think it's the largest carbon capture project in the Middle East. So they are, but somehow the message isn't getting across. You can go to Mars, but that makes the news. But the fact that you are trying to lower the carbon footprint, that you have taken steps. Obviously, nuclear is going to be a big help, but there seems to be a reputational risk associated with, the oil and gas business. And do you think that the message is getting across that they're changing?
It's a good point. I do see ADNOC and the other Gulf NOCs to reposition themselves in this new world. In terms of absolute emissions, of course, it's enormous because of the scale of production. What they're really focusing on is emissions intensity, and they're constantly emphasizing the low carbon nature of their oil because they produce in huge reservoirs and they don't have big water cuts. They don't require as much energy to produce the oil. So on a per unit basis, the emissions profile is really quite low. And they really focus on decarbonizing the oil footprint that they have for all oil and gas production. They're really focusing on carbon capture and storage. They want to focus on decarbonizing the entire value chain from the wellhead to delivery because customers are asking for it. And I think they see that the oil producers that will be positioned the best in this new world are the ones with the lowest carbon oil and the lowest carbon intensity of the crudes that they produce. And they do see some advantages relative to, for example, one of the non-OPEC producers in the US and elsewhere that have a much worse emissions intensity profile. But we're at an interesting point because the UAE has big climate ambitions as well. Funnily enough, Sultan Al Jaber is also the UAE climate envoy. And they're trying to basically say, we recognize that the world is changing. We want to improve the way that we deliver oil to the world, but we also want to underscore that no matter what is the pace of the energy transition, no matter how quickly we decarbonize, we are going to need oil and gas for a long time to come. You should get your oil from us because the emissions intensity profile is better and we're doing all these things to clean up our act. That's the kind of delicate balance that they're trying to strike. And it's not them alone. I think Saudi Aramco is singing a very similar tune.
Yeah, I think Patrick Pouyanné, CEO of Total, has put it really well. It says, I need the black in order to drive the green. I can't have one without the other. We have a question from Colby Connolly, who says, you mentioned that the jury's out on gas self-sufficiency. Can you expand on that and any implications for ADNOC's role in reaching that goal?
Yeah, so gas self-sufficiency is definitely a big deal in Abu Dhabi. There is a desire to wean themselves off the dependence on Qatar for gas imports via the Dolphin gas pipeline. I believe that contract expires in 2032, something like 2 BCF a day now that the UAE imports from Qatar. And the way that they're trying to do this is basically by increasing the focus on unconventional gas and sour gas. A good example is the Gasha sour gas concession, where they've signed a JV with, I think, 3 or 4 different partners now. And that is a big concession. It's going to be very costly to develop that gas. It's offshore. It's complicated to process. It's going to require a lot of investment to do this safely. But they have big ambitions, I think, to produce 1.5 to 2 BCF in that field. There are a series of smaller concessions that have potential, gas production in the coming years, and there are some interesting exploration assets as well. Block 3, which is issued in the first licensing round to Oxy, is a block that seems to have a lot of unconventional gas production. This is an area where Oxy has some expertise and experience in Abu Dhabi as well with Al Hosn gas project. So they know how to do this. It's relatively close to processing facilities. If they do find gas in big volumes, I think they're quite optimistic that they can process it there. And then there are some other projects like the Jebel Ali project, where I think that there are big question marks. They've said that there's something like 80 trillion cubic feet of gas in place. But we don't really know what the recovery rate is going to be there. We don't know how much capital is going to be required, but it's going to be massive sums of money. And I think there are big challenges in terms of the development of that gas. ADNOC doesn't really have a robust, deep pool of service companies that have fracking expertise, that have the midstream capacity to develop this kind of like manufacturing style unconventional gas production, where you have to drill lots of wells and lots of horizontal drilling and continuous drilling to develop assets like that. So I think there are a lot of uncertainties about how that will play out. Some of these fields are meant to be brought online by 2025 to 26. We've seen some delays with the service contracts being retendered for various reasons that we don't need to get into. So I think that it's quite possible that these projects will be pushed back a little bit. And ultimately, there's always a question for a country like the UAE, whether or not it's more economic to develop these resources at home or import gas. The UAE has been importing LNG, mostly for seasonal purposes for many years. And it could continue to do so if it really sees this need to meet seasonal demand periods. But I do think that there's a big emphasis on trying to build the expertise in domestic unconventional gas production, to build out that domestic supply chain, to supply jobs, to supply growth opportunities for kind of a robust set of companies. So I do think that there's kind of an industrial focus on trying to expand this. But yeah, it's going to be costly, and it may be slower than they hope.
And also on gas is now coming into sharper focus because of methane emissions, and even though the UAE is not one of the biggest, you're seeing Japan is now insisting on Singapore, Japan insisting on carbon neutral LNG cargoes from Qatar. And it's interesting that, when we talk about self-sufficiency, we've seen Qatar going exactly the opposite way of taking over, contracts expired with Exxon and Total, and they've taken 100% ownership. So I guess that also strengthens the desire of the UAE to become self-sufficient, because then you're no longer relying on gas supply from a country where relations, I guess, may have been restored, but I don't think they're, sort of one big happy family yet. We have another question from Kobe, who it's sort of similar to what we were talking about before on the decarbonization, that ADNOC's last sustainability report, he says, came out in 2015. Do you see the company nearing a point where it may make greater disclosures on emissions, etc.? Or will its focus be on emphasizing low carbon intensity production, CCS, etc.? We've sort of answered it, but maybe if you want to expand on
yeah, I do see ADNOC moving in that direction. I wouldn't be surprised if they start to issue more detailed reports, because I do think that they want to emphasize this aspect of their production. It's important to the company's identity and the way that they're positioning themselves in the world. Generally, it's not a company that's had many disclosures over time. It's not been a very transparent company. You get a lot of press releases and speeches from company officials, and not a whole lot else. If we look at Saudi Aramco, for example, there's been a big cultural change there in the fact that they have an investor relations team now. They issue quarterly reports. They have much more detailed disclosures and financial disclosures. Of course, they've had an IPO, so I don't think ADNOC is going to embrace that kind of transparency. But I do think that, having more detailed sustainability reports is in their interest. I see them moving in that direction.
Yeah. One of the reasons why Abu Dhabi's always been, or UAE's always been able to attract foreign investors and people willing to go in is because it has been relatively stable. They've moved along with the times. I mean, you see now that you can live in Dubai and work remotely, even though if you're not based there, you don't need a sponsor. They've loosened up some of the social restrictions that were a deterrent. So is it, what about the governance change? I mean, at the same time, we're seeing this sort of liberalization, we're seeing this transformation of an NOC into more of an IOC type company without the transparency. But at the same time, you're seeing a consolidation within the royal family, within, the immediate brothers of MBZ, his son, basically now in charge. It's a bit like Saudi Arabia and MBS, sort of now the supremo of economic and energy policy. Where do you see that? I mean, how do you interpret that?
My interpretation of that is that Mohammed bin Zayed is really the guy who's set out the vision for the UAE economy writ large, and certainly for the oil and gas sector. And I think that really since Khalifa's stroke in 2014, he'd already been accumulating power for some time. But by 2016, with the reshaping of the Supreme Petroleum Council at that point, it was pretty clear that he was placing his stamp on the oil and gas sector in the way that it would be governed, in the strategic direction that it would take. And I think everything since then has really flowed from that kind of pivotal event of restructuring the SPC. If we take a step back, I mean, later that year, ADNOC restructured its business units. It approved this new 5-year budget that had a pretty ambitious capacity expansion. At the time, was to 3.5 million barrels a day. And at that point, they really set out replacing senior management, setting out key targets, consolidating all the offshore fields, and everything has kind of flowed from that. So I think in terms of the template for the oil and gas industry and governance of it, and where the sector is headed, Mohammed bin Zayed is in firm control. Sultan Al Jaber is the person who's driving all this forward at a very rapid pace, and the direction of travel is very clear. I think if you're a foreign investor in Abu Dhabi, you kind of know what you're getting at this point. You have a new set of partners, maybe in some cases. In some of the concessions, you have a much broader array of partners. Some of them are Asian companies, maybe that don't have the best technical expertise. They're more financial and strategic partners. But it's still a place with a fair amount of predictability and stability. And I think that, here ADNOC is kind of building on its legacy. They've always had a pretty significant presence of foreign companies. And it's always been a good place for companies to do business because it is stable. There's no risk of, political violence. There hasn't been a great deal of volatility over time. And they know these assets well. And you have companies like BP that have been there for decades now, and Inpex and ExxonMobil. So they know the set of actors, and these changes that have come up with Mohammed bin Zayed in the ascendant and reshaping the sector, the people who've been in Abu Dhabi, they saw the writing on the wall a long time ago, and they kind of knew where things were headed.
Yeah, I think when it came to transparency, I think Exxon was a bit reluctant to bring in new partners at the time. I remember because their Zachem division was sort of like a separate floor, and if you didn't have business, you wouldn't go up there, and they're pretty secretive themselves about their operation. And we have another question now on the lease and lease back, the sort of the borrow and lease policy. He says, what's your take on the lease and lease back agreements over Gulf oil and gas pipeline assets, which ADNOC seems to have paved the way, now Aramco appears to be following? How much room and or demand is there to expand these types of transactions?
Yeah, I do think this is an interesting case of the Gulf NOCs kind of playing copycat and learning from each other. And here I think that ADNOC has definitely paved the way. and Aramco has taken a page out of its playbook. It's surprising to me how much money can be unlocked from the midstream. It's not the most exciting sector. I think it's a segment that was really overlooked for a long time. And frankly, I've been surprised by how much value could be created from a stake in those assets. It's kind of like an annuity type investment for these companies. And that's why you've seen some surprising investors in Abu Dhabi, like GIC, for example, from Singapore. It's just kind of a reliable source of stable returns over time. You buy a stake in the pipelines and you guarantee a certain guaranteed return over time, almost like a utility type model. So how much more they can unlock from those investments, I'm not sure. But I do think that Aramco again has shown how much money can be raised by selling off certain segments of the midstream without losing control over those assets. And in a way, Abu Dhabi's done a similar thing. ADNOC has done a similar thing with its real estate unit. They've raised, I think, $2.7 billion. It's a pretty shocking number just by selling off a portion of its real estate holdings. So, what's happening here is that Sultan Al Jaber has tasked the whole company with looking at all of their assets, all the assets in their portfolio, and thinking, where can we raise capital? Where can we invite new partnerships? Where have we been sitting on, potential sources of revenue and growth, and also fresh ideas that we've been neglecting for a long time. And increasingly, I think some of the other Gulf NOCs may look at doing that as well. And I think Aramco will probably follow that up with similar moves in the future.
Do you find it strange that the only cross-border deal within the GCC is the Dolphin gas pipeline? And you listen to CAPSAG and you listen to all these people, and I've written about this as well. The fact that you could integrate. I mean, they do have the GCCIA, which links their electricity grids, but it's not that that big. It's not that active. There could potentially be huge savings. You wouldn't need to invest in so much infrastructure and expanding your gas or your electricity grid. And you wouldn't need to have nuclear power plants in Dubai and Saudi Arabia and and other places, because if you do have interconnections or a stronger interconnection. And I've heard Sohail Masrouri, who we haven't mentioned, the oil minister, he's been around for a long time. He's also quite dynamic. He's managed to sort of, and I think he has more influence than his predecessors, if I'm not mistaken. He's got a presence. He's got good relationships within OPEC. He's been around for a long time, but he's spoken about the Abraham Accords and how they could help to strengthen interconnections within the region. You can have Jordan, Iraq, through all the way to North Africa, through Egypt. They're obviously also now interested in the East Med. I think they are part of the East Med gas initiative now. So is that not a sort of a way forward? Because you don't see too many cross investments. I mean, Aramco has been talking about going into Iraq, but nothing's really come out of it. And obviously you have some parts of the GCC or the Middle East around the Gulf that are short of gas. Iraq is still flaring 50% of its raw gas. So isn't that a way forward? Do you think that is something that might come, or are they too inward looking and looking at their own self-sufficiency and securing their own energy needs rather than sharing the spoils?
It's a good question. I mean, my sense is that things that are economically rational are often prevented by politics. I mean, if you think about the GCC as a whole in terms of energy resources and energy demand, it is a bit bizarre that you have countries like the UAE and Kuwait that have been importing LNG. There's just a lot of sources in the region for the gas. And it doesn't make a whole lot of sense to build these expensive import terminals and to deal with all the uncertainties about global LNG prices in order to meet seasonal demand that in theory can be met by the neighbors. The Dolphin gas project is the great exception in the region. And it's really been a win-win for both the UAE and Qatar, I think, throughout its existence. That project came to be despite some of the regional geopolitical problems, and others on the call have much more expertise in inter-GCC politics than I do, so I don't want to get myself in trouble here. But I think that the blockade of Qatar was extremely damaging in this regard. I mean, the message that it sent is that you have to go your own way. I mean, Qatar's learning from that was that it had to develop its gas sooner. It had to show that it wasn't reliant on, the whims of its neighbors, and that it could strike out on its own. It could leave OPEC. It could sell enough gas independently. It was a global leader in LNG, and it didn't really need help from the neighbors. And if the UAE decided to stop imports in 2032, that's fine. Qatar can sell the gas somewhere else. So I do think that there's a certain amount of nationalism and a focus on self-sufficiency that's a bit damaging in the GCC. Could that change in the future? Sure, it could. I think we might need a couple more years of political healing before we get there, though. That's my sense.
I remember when you talk about the geopolitical issues at the time Dolphin was being built, there was a section of pipeline, a subsea pipeline that sort of went through Saudi waters, and there was a bit of a delay in completing that. So yeah, it wasn't just a bilateral issue. We have a question here from Bhushan Bari who says, can we expand the discussion a bit on the geopolitical context and the UAE's goals and how ADNOC might be able to further on those geopolitical goals?
Sure. So if you look at ADNOC's big customers, they're primarily in Asia, and the proportion of demand in Asia is only going to grow. That's China, Japan, Korea. Those are the big off-takers of crude. The proportion of those three countries in global sales is going to increase in the future. So there's been a very clear effort to solidify those linkages with their key demand centers by linking them and their national companies or private companies with the upstream side. And that's why you've seen this big entry of Korean companies, Chinese companies, and increasingly Indian companies over the last 5 years. If you look at the ADNOC OPCO concession, there are several stakes now that are held by kind of a coalition of Indian state companies. They've won blocks in the licensing rounds as well. You have some Chinese companies, formerly CEFC, China Energy, now it's Shenhua. They're not really technical leaders in the oil and gas space. Their presence in the upstream is really symbolic. I don't think that Abu Dhabi's experience with the technical know-how of Chinese companies has been great over time, but they're there for important geopolitical reasons. Historically, I think that the way that the oil sector was governed in Abu Dhabi very much reflected the geopolitical realities of the Gulf state. The historic relationship with the UK, going back to the crucial states system, a very strong emphasis on having American companies present in the upstream. Mohammed bin Zayed, the rumor is that he was formerly very favorable towards ExxonMobil and having a big presence of American companies. I don't think that's gone away. But all the Gulf states are trying to diversify, reduce their dependence on the Western majors and Western trade partners to reflect the realities of today. The economic future and their bilateral trade increasingly is going to be focused on Asia. So every major decision about oil and gas concessions in Abu Dhabi has a strong geopolitical element. That's unavoidable. There's always a technical ask, a commercial ask, but there's an important geopolitical element too. And we saw that right from the beginning with the ADCO concession when it came up for renewal starting in 2014. It took a long time to get that concession renewal done. It was delayed by a year. Total moved in first, and then it still took a long time for all the other partners to line up. And I think that the ultimate reflection, the stakeholders in the ADNOC onshore concession really reflect the political drivers for the UAE. And that template was followed in the offshore, being followed in the the bid rounds and everything else.
But I mean, that doesn't actually reflect the political side of because it still tilts pretty much westward. I mean, and the Abraham Accords obviously are part of that the orbit, and you have a very powerful and very active UAE ambassador in Washington. So I think we have Justin Sibrel, who's asking that in parallel with ADNOC's production expansion plans, is it also planning an expansion of downstream value-added activities, petrochemicals? If so, would these be ADNOC developed, operated, or privately developed? I think you do cover that in the paper.
Yeah, so ADNOC has a $45 billion downstream expansion plan. They want to raise refining capacity by about 65%. I believe they're building a new 600,000 barrel a day refinery at Ruwais. They're going to triple petrochemicals capacity by the year 2035, I believe, to 12.2 million tons. So it's a big downstream expansion and a big petchems expansion. And they have sold off part of the downstream and refining segment. They sold 35% to Eni and to OMV. And they also have a trading initiative as part of that, where there's a joint venture for international marketing and trading activities with those two companies as well. So yes, they're doing all those things, and the same kind of movement that's happening in the upstream in terms of growth and also new partnerships is happening in the downstream.
And I think you mentioned in your paper that the marketing agreement with Eni and OMV is a bit strange because they don't really have that much marketing experience in Asia, which is where it's,
Yeah, that's correct. These are not really the leading lights in crude marketing at all. And particularly in Asia, they have a very, very light footprint.
Yeah.
It's much more important from my perspective to be able to sell effectively in markets like India and China. So, it's possible that they'll strike future JVs with Chinese traders and try to build up their capacity in that area. If you look at the Murban futures contract and some of the partners that they've signed up and the way they've positioned it, it's really to try to make Murban the kind of leading crude benchmark for Gulf to Asia crude sales. And a big part of that is trying to get more uptake from lots of sellers of crude to Asia, but also the buyers. So that's the direction that they're moving in. I don't think that Eni and OMV tie-up is quite getting them there. And by the way, I do think that they signed this deal with Eni and with OMV for different political purposes too. The OMV relationship is long-standing. IPEC formerly held a stake in OMV. OMV's got a big stake in the upstream, so you have kind of this complicated convergence of things. And Eni is an interesting example because Eni is a late arrival into the oil and gas sector in Abu Dhabi. They really had no presence at all before 2018, I believe, and now they're everywhere. And they're also partnering with Mubadala in some important assets, both at home and abroad. And I think that is really quite interesting. They partner, for example, in Egypt with the Zohr concession. So there's an interesting kind of approach that Eni is taking to get into Abu Dhabi through different means. And some of these are more politically motivated tie-ups that don't really deliver on the commercial side, or vice versa.
Yeah, and you also have some new American arrivals as well with the new concession, with the new. I think they're sort of trying to give something to everybody. From Kristen Diwan, who actually recently wrote about a paper for AGSIW about this sort of the changes in the succession, new crown princes being either groomed or named, or I think she called it all the king's sons. Kristen. Anyway, she says, Ben, you've said that Abu Dhabi always aligns oil policy with geopolitical goals. With the UAE's new growth policy, we've seen more open tension with Saudi Arabia within OPEC, particularly last December. How do you see Abu Dhabi aligning its oil policy with this important relationship? And what do you think of Saudi Arabia's early efforts to energize its oil policy using UAE as an example?
Yeah, I think this is going to be a really important challenge over the next decade. And things got a little bit tense and a little bit ugly last winter in the run-up to the OPEC meeting in December. The key driver for Saudi Arabia within OPEC these days is to maintain cohesion and this sense of collective burden sharing and to maintain discipline within the group. That's been the watchword for Abdulaziz bin Salman for a long time now. And I would argue that they've been really successful in keeping the OPEC plus group together. The compliance rates have been extraordinarily high by OPEC standards. But we did have some flare-ups happen last year. There's a month, I think it was last August, where the UAE overproduced. It went way above its quota. And they said that they had to do it for seasonal demand reasons. But there was a pretty public rebuke of the UAE. Sultan al-Nasri, I think, was invited to Saudi Arabia for a meeting. And then the next time that they appeared in public, they were both sitting at a table together, trying to send them a very clear message that the UAE was part of this group, it was in line, and this is a symbol of the kind of discipline. But I do think it's going to be a challenge. There's no doubt about it. I mean, the UAE has these growth goals in place, and they're going to pursue it. And the one thing I want to emphasize is that this is not spare capacity. They're not raising production capacity to develop more spare capacity enough to produce it. The plan is to produce it. And they have a lot of joint venture partners, foreign companies, that are investing in these expansion projects. They're not doing it to keep the oil idle. So it is going to be a tricky issue for the two sides to navigate. And I think that there are probably going to be some uncomfortable moments in the future between the UAE and Saudi Arabia. But the positive side, I think, is if you look at OPEC as a whole, I mentioned this earlier, but there's really not many countries in the group that have this ability to raise production capacity. Most of them are producing flat out, and there's just not a whole lot else that they can do. But I think it's just going to be a reality that the UAE is going to demand a higher quota. And from my perspective, the Saudis and OPEC are probably going to have to find a way to accommodate it. The implicit threat that the UAE has made is that it's pursuing its national interest, and it sees its national interest as raising production. And if that conflicts with its OPEC quota, I think they've sent the message pretty clearly that they're going to reconsider their position in OPEC, and they're not tied to it forever. They want to stay in OPEC. They see massive advantages. There's a huge political alignment between them and Saudi Arabia that's not going to go away. But the reality is this is the course they're pursuing, and I think they're going to defend it.
Yeah, I think there's been a distinct change. I mean, the old days when you'd go to an OPEC meeting and all the GCC countries would go to usually the Saudi minister's suite, and they would sit there and they would come up with a united front, and that's not happening anymore. And it's not just the UAE that's been it's been wrapped on the knuckles. It's also Iraq. I mean, at one point, I think Abdulaziz bin Salman had the Iraqi and the Nigerian ministers sitting on each side, as if they were being punished and for overproducing. But I think since then, the Saudis have sort of scaled back and basically said, oh yeah, we do understand that the UAE needed more oil for gas. And I think that may have justified the reason why they gave Russia a slightly additional quota, because they also needed to produce more for seasonal reasons. But again, yeah, we saw it in Yemen, we saw it in sort of policy divergences, the accord with the Abraham Accords that Saudi isn't a part of. So I think we're seeing, more of an independent policy. It's like we don't, we can go to Mars, so we don't really need to. We don't have any more questions. We still have a tiny bit of time, so I don't know if we want to sort of recap or.
Yeah, I mean, I'll just add one interesting element to me is the way that Mubadala's role is changing. I didn't really talk about this in the report, but I think it's worth highlighting. Mubadala always had this role of being the engine for economic diversification in Abu Dhabi. It was created by Mohammed bin Zayed. It was very much his baby, controlled it. But the mandate was it was unofficially that they didn't invest in domestic oil and gas. They did have a lot of stakes, as I mentioned, in companies outside the UAE. And some of those companies like OMV and Wintershall had stakes in UAE. The two sides were always kind of kept separate, and they have converged a little bit. Since Mohammed bin Zayed has kind of taken control of the portfolio, both ADNOC and Mubadala are being joined up in interesting ways. And I mentioned the Eni example. I think that one's probably really critical. The way that they got into Abu Dhabi, I think, was via a partnership with Mubadala. There are other examples of this too. If you think of BP, for example, BP hemmed and hawed a little bit before they decided to go into the ADNOC onshore concession. And the way they did that, from what I recall, was not by paying cash, signature bonus like Total did, but rather by issuing shares in BP to be held by Abu Dhabi. Those shares were held by Mubadala. So that was kind of an early stage. And then there are other examples too. PTT, the Thai company, now partners with Mubadala on a lot of assets around the world, in Thailand, but also in the UAE. And from my reading, they've kind of used that as their entree to get into the upstream in the UAE. And now they're a shareholder in several offshore stakes. And I do think that Mubadala is being activated in a different way to try to be an investment vehicle in lots of different sectors, including oil and gas and some of the industrialization. But it's not separated from ADNOC in the old way that it was before. So in other words, you don't get in trouble by dealing with Mubadala, whereas before you would if you were an oil investor.
We didn't talk about Masdar, talking about Mubadala. What about Masdar's role in all of this? I mean, obviously they're renewable energy, but it used to be that Sultan Jaber had both. I think he held both Masdar and.
Yeah, I think he's still chairman of Masdar. Yeah. I think that Masdar has a lot of symbolic significance to Abu Dhabi, and they host the International Renewable Energy Agency. They have Abu Dhabi Sustainability Week alongside ADIPEC. So it's very important for the UAE to be seen as a player in in the renewable energy space as a key voice in international climate issues. Sultan Al Jaber met with John Kerry recently, I believe, and the UAE is very keen to cooperate with the US with the upcoming Leader Summit on climate issues ahead of COP26 this November. So Masdar is kind of a key actor in the space. It has made investments in renewable energy. I think it's become a little bit more quiet in the last couple of years. This grand vision for Masdar City never really materialized the way they wanted it to. But it does have an important convening role. And it does show Abu Dhabi's commitment to investing in renewables and becoming a key player in that space too. And Sultan Al Jaber's role is really interesting because he links everything together.
Yeah, and if you looked at the recent, I mean, we haven't really talked about COVID, but Abu Dhabi emerged as the safest city in the world to live in because they did. I mean, I think there was a difference between the way Abu Dhabi and Dubai managed it, but you know, they seem to be doing very well on vaccinations. And again, I think that's part of the whole structure is very top down. I mean, whether good or bad, it does, and they, you know, it's very safe, it's very secure, crime rate is very low, so they've obviously done something very, very well. It may not be, you know, it may not be perfect, but I think for a small country, and as you mentioned, you know, Abu Dhabi has one of the highest per capita incomes in the world. You have infrastructure, and I think that started with Sheikh Zayed. He was sort of ahead of his time in that he did invest in infrastructure, and there was an environmental policy in place even before the world, you know, started focusing on climate. So I think that the structures were there. It just took a long time to build on these structures and move ahead. And I think your paper gives us a very, very excellent overview of what has happened in recent years. And I want to thank you and thank all our speakers. I think we have 2 more minutes. Raymond, do you want to say a final few words on? Thank you, Ben.
Thanks. Yeah. Thanks, Kate, and thanks, Ben, again. Just a couple of closing comments to thank you all for joining us for this really fascinating discussion. I think all of you have received a copy of Ben's paper in PDF format. It should be available on our website, I think, later today. You know, we'll send it out via email to our distribution list as well. So that's a reminder for you to go on our website and sign up for our weekly newsletter, the DAO. Our website is www.agsiw.org. We have plenty of analysis that comes out on a weekly basis and upcoming webinars that you'll be notified about. We'd love to continue this conversation as well. On the energy transitions in the Gulf. So if you have any ideas, please feel free to reach out to us with suggestions. Always happy to partner and work with all our friends out there. So again, thank you all for joining us. Ben, thank you so much. Kate, appreciate your moderation. Thank you all for the interesting questions.